The SEC approved 11 spot Bitcoin ETFs. Here's what you need to know. Following months of anticipation, the U.S. Securities and Exchange Commission, SEC, finally approved 11 spot Bitcoin exchange-traded fund ETF applications on Wednesday. Industry watchers are expecting billions of dollars in new capital to flow into crypto as a result of the new funds, which will buy Bitcoin and sell ETF shares via conventional brokerages. The ETFs, from Wall Street giants like BlackRock and Fidelity and crypto-focused firms like Grayscale and Bitwise, started trading on Thursday. According to Bloomberg, over $2.6 billion has changed hands in just the first few hours of trading. Coinbase is the custody partner for 8 of the newly approved ETFs. Bitcoin, which rose more than 150% in 2023, partly on the expectation that such an ETF would be approved, crossed $49,000 on Thursday morning, its highest point since late 2021 before retreating. The approval of the ETFs marks a watershed moment for the crypto industry in making Bitcoin accessible through an investment vehicle that is widely embraced by mainstream investors. We're here to answer your ETF questions. Why are spot BTC ETFs such a big deal? Over the course of the last year, crypto prices have repeatedly surged as news broke around the SEC potentially approving one or more of the products. On Tuesday, for instance, BTC prices spiked after the SEC's X account was compromised, and a false message appeared claiming that the agency had approved Bitcoin ETFs for trading. That's because ETFs, which typically have low fees and track an asset like gold or a basket of assets like tech stocks, are popular investment vehicles with more than $10 trillion under management worldwide, because they can be bought or sold via familiar brokerages and held by everyone from individuals saving for retirement to hedge funds. Spot BTC ETFs are seen as a potentially powerful way to increase mainstream adoption of crypto. Before this week, there were already crypto ETFs in the US, but not spot ETFs that hold crypto directly. Instead, they hold BTC or ETH futures contracts, bundles of agreements to buy crypto in the future at a specific price. The first BTC futures ETF had a blockbuster debut in 2021, but last year several ETH futures ETFs launched with less fanfare. What's the difference between buying a spot BTC ETF and buying Bitcoin? Spot BTC ETFs offer investors exposure to Bitcoin's price movement. Instead of owning BTC directly, you would own shares that are backed by the BTC the fund purchases. For certain investors, there's a benefit to this arrangement because the spot ETFs trade on conventional exchanges and can be accessed through traditional brokerages. It will be easier, for example, for retirement accounts, hedge funds, and pension funds to gain exposure to Bitcoin's price movements. But if you want to control your own Bitcoin with your own private keys, you'll need to buy it from a crypto exchange like Coinbase. This gives you much more freedom over what you can do with the Bitcoin. Everything from sending it to a self-custody wallet to interacting with the broader crypto ecosystem by, say, purchasing ordinals. How big is the potential market for spot BTC ETFs? The funds are expected to bring billions of dollars of fresh capital into Bitcoin from both individuals and institutional investors. When the first gold ETF was introduced in the US in 2004, it saw nearly $2 billion in inflation-adjusted inflows in its first 4 weeks, and nearly $5 billion by the end of the year. Last fall, before the ETFs were approved, the founder of the Digital Assets Council of Financial Professionals noted that half of US financial advisors held Bitcoin themselves, but only 12% were recommending it to their clients. The primary reason that advisors were not recommending Bitcoin is because there wasn't an ETF, he added. In efforts to attract investors, many of the Wall Street firms pursuing spot ETFs have announced strikingly low initial management fees, with BlackRock's iShares ETF charging 0.12% for the first 12 months or first $5 billion of inflows, and the Invesco Galaxy ETF waiving its fee entirely for the first 6 months or $5 billion. ETFs will make crypto available to millions of new investors and further cement it as a mainstream asset. Thank you so much for watching this video. We appreciate your continued support and look forward to serving you with more exciting videos in the future. We hope it has been helpful in understanding the world of passive income. Don't forget to hit that subscribe button, like, and comment below, and turn on your notifications so you never miss a video from Passive Income Journey 777.